me start by asking you, should the underlying principle be here, as far as the asset managers are concerned, that they should at this stage be disinvesting from oil and gas businesses or any companies that are perceived not to have a good carbon footprint?
Thank you very much for that question, and thank you very much for inviting me on the show. I think the key issue is it is not for us as securities regulators to determine where investors want to invest. What we want to facilitate is that the proper information is available for investors, and what we have observed in the past years is an increasing interest at the side of investors in both the issue of what is the impact of the environment on the company, on the issuer, but also what is the impact of the issuer on the environment, for example, in terms of environmental impact. And it's our role as securities regulators to provide that information.
Good morning, Mr. Maijoor. But how much longer will it take for firms to actually start implementing these regulations and start giving investors stricter information when it comes to ESG criteria?
Well, this is already a longer-term development where companies on a voluntary basis have disclosed more and more information on both the impact of the environment on their company value, but also more information on the impact of the company on the environment. But most of that has been so far on a voluntary basis. And to provide a greater comparability, to give more reliability for this information, it's important indeed that the public sector now steps in and gives more requirements around the sustainability disclosures. And so it is a gradual phasing in of these requirements. There will be an important one, for example, this month, where especially for the financial sector, for asset managers, for insurance companies, there will be more requirements around disclosures on sustainability impacts.
But in terms of the risks for investors going forward, Stephen, you'll know this way better than I do. There are multiple risks out there as well of investment in environmental technologies and sustainability and renewables as well. And we're hearing a lot of voices now saying they're very concerned actually at the price of these assets and the price of the transition to greener sets of rules across the board. Do we also have to factor in within somewhere in these KPIs that actually the risk of many of these companies is going to go up?
Well, you're right. So it is one part, and that is where the so-called taxonomy comes into place, is it gives information on what type of economic activities contribute to sustainable objectives. But in addition to that, and as you rightly point out, companies also want to signal and give information on their transition towards these sustainable activities. And so we, for example, give information, and that is part of our advice, on the investments in sustainability activities. And so that might materialize only over time. But you're right, there's both a demand for information on sustainable activities, but also on information on the trajectory and the transformation towards these sustainable activities.